Our next panel, or our next session, is going to be with Aave. They're going to be going through Aave Pro for institutions, which is essentially a lending protocol built for institutions. We have Ajit, who will be joining us, that will be presenting some slides and talking a bit about how they think about working with institutions moving forward. Ajit?
First of all, I'm Stani. So I'm substituting for Stani. Stani has to be in a different meeting. Thank you for inviting us, Imran, and the DeFi Alliance team to talk about Aave Arc. The reason we chose the name Arc is because we're essentially bridging centralized and decentralized finance, and also because there is Arc de Triomphe, and I'm currently in Paris, and DeFi, as we say, is the future of France. So Arc de Triomphe was a particularly nice monument to start that, creating that bridge and that gateway for institutions to come into decentralized finance. So it was initially called Aave Pro, but then we thought there are lots of it's clear that there are lots of pros in the community, and there is no reason why we should believe that institutions are the only pros. So Aave Arc is a far better name, and that's what we are going with. Now, so there is a bit of an intro here. So Aave, this slide is a little bit older. Older markets have corrected a bit, and we currently have 18.3 odd billion in liquidity in Aave, so which is the amount people have deposited across the various Aave markets. A little bit of background is due. So we had a lot of inbound interest from. So I joined Aave sometime around December. I started working with the Aave team somewhere around September, and there was a huge amount of inbound interest from institutions and corporate treasuries, but also regulated financial institutions in DeFi, partly because of the significant growth. But also because of the potential of the technology to create. So a lot of people started to see the growth as a proxy for what can happen, right? So yes, there is a lot of excitement about the growth, but there is also, I think a lot of people are starting to see what Stani and Maker and some of the DeFi OGs saw 4 years ago, as to how this type of internet native financial infrastructure can become the default way we build financial infrastructure for financial markets 5, 10, 20 years from now, right? So Web3 is in its early days, and the growth is essentially representing what is the art of the possible. And a lot of those entities were essentially family offices, hedge funds reaching out to me and Stani and the rest of the team on LinkedIn, asking questions about, hey, how does Aave work? How do we participate in Aave? How do we participate in the rest of DeFi? So we spend a lot of time on education, and we started asking institutions, what would essentially make it possible for them to, or what's stopping them from essentially accessing DeFi. Now, with regards to the overall vision, we are fully aligned with the DeFi community's view. The broader DeFi community's view that the financial infrastructure should be completely open. Should it be permissionless? Yes. But can all the, it's also part of it's a greater mission for us to enable access to everyone, right? Everyone to DeFi. And can everyone access DeFi directly today, or do they need to, access DeFi through fintechs, hedge funds, asset managers, and others? The answer, I think, is obvious, that a number of intermediaries provide a value-added service, and those and a lot of consumers will need to access DeFi and this infrastructure through intermediaries. Now, when we started asking, okay, what's stopping a variety of regulated intermediaries and their consumers from being able to access DeFi? One of the requirements I think came up, especially from US regulated entities, is the need for permissioning and KYC, right? So no surprises there. I think the main concern from institutions was around essentially borrowing liquidity from liquidity protocols and essentially the source of that liquidity. So KYC came up as an obvious requirement. Now, I don't believe anyone likes KYC. KYC adds a lot of friction. KYC in the way the banking system works also is poorly implemented. The way the rules are set up, we haven't necessarily made it easy for Deutsche Bank and a variety of other regulated banks to share infrastructure or data for KYC. Every financial intermediary does KYC over and over again using the same sort of data. The same customer has to go through the KYC process tens of times, and that's partly because of how the rules are written. A lot of institutions don't necessarily feel comfortable reusing attestations from other participants, and hopefully regulation will move in a direction where we can have decentralized identity on the internet, and therefore KYC and onboarding processes across DeFi can be much more simplified. With that backdrop, I think we essentially decided to create an Aave market, which has a notion of a whitelister, right? So just a bit of background on the slide. So why are institutions so interested? Because the yields, the yields in the broader economy are zero or negative, and the yields in DeFi, even in this highly deleveraged environment, are still 2.5 to 4.5%, depending on the asset. There is a lot of liquidity in the market. There is great search for yield and returns. Aave and some of the DeFi blue chips have earned a lot of trust, and I think we and others have really earned it by essentially creating resilient, well stress tested, highly secure, audited software, which we really obsess about security. And in a highly adversarial environment, we have created software that has held itself in a highly adverse market environment. So there is a lot of trust that's starting to build up. Risk management, a lot of financial engineering and risk management techniques that come in from Gauntlet and others. And the markets proved themselves, on 19th of May when the markets dropped, Bitcoin dropped 45%. And then, but the biggest thing is, DeFi enables permissionless innovation. So when I used to work for Goldman to work on cutting edge derivatives pricing, you had to get a job with Goldman. Now, Aave and other decentralized communities are enabling just about anyone with a good idea and talent and the motivation to contribute to these, protocols from anywhere in the world. So that type of permissionless innovation is the biggest reason that TradFi or traditional financial entities want to participate in DeFi and really want to access really the quality of engineering and design and product that's currently going on. So institutions are tremendously interested. Ray Dalio has spoken about it. We had a lot of inbound interest from hedge funds, asset managers, family offices, so on and so forth. So we decided to create an Aave Arc market. And now our role as Aave is to build software. We build technology, for market and this type of infrastructure. And so regulated intermediaries in the Arc market will play the role of what we call a whitelister. And whitelisters will be responsible for KYC, in this case KYB, user onboarding and AML compliance. But it's still DeFi. Now, the previous discussion between Gabe and Angela was quite an interesting one, and I really enjoyed it. So Aave Arc will also be governed by the community, right? So while there is a role for intermediaries to offer, a financial service, the whitelisters to offer a service on top of this software and infrastructure, it's quite important for DeFi that what makes it really decentralized is the governance, right? The Aave companies or the whitelisters or any bank or an intermediary is not actually in control of the entire infrastructure. The infrastructure is still governed by the same decentralized governance mechanism that essentially makes all the decisions on the rest of the Aave pools. So it'll still be governed by the community, but then there will be a role for whitelisters to KYB and onboard market participants and allow them to create a liquidity pool that meets their requirements and allows them to meet their regulatory obligations. So that's kind of the vision in the short term. There is a long-term vision, which I think I'll describe a bit later. So Aave Arc will have, essentially initially this is the initial view. We wanted to keep it really simple. We thought about, uncollateralized lending. We thought about initial and variation margins. we thought about a variety of tools for capital efficiency. We did a lot of research and financial engineering, but in the end, we said, look, let's start with something really simple. Let's deploy Aave V2 in a permissioned environment, and provide a very simple market for liquidity. Create a infrastructure with just 4 assets: Bitcoin, USDC, Ethereum, and Aave, which only supports variable rate loans initially, no stable rate loans, no fixed rate loans. But the mechanism is exactly the same, because partly because a lot of these institutions, and you'll be surprised by how many family offices and hedge funds are already using the Aave protocol, and there's no way for us to know apart from when they reach out to us on LinkedIn, right? So we learned, we were very pleasantly surprised by how many institutions were accessing the protocol. So we decided to build something they're already familiar with and are comfortable with and fully understand, and then build a lot of sophistication on top of that through a process of governance, right? So as opposed to us building anything more complicated, we wanted is to create a mechanism for institutions to participate in the governance of the protocol. Just as a variety of individuals, high net worth or otherwise, and we have 70,000 plus token holders if you look at the Ethereum blockchain. Just as they participate in governance, then institutions, hedge funds, hopefully at some point, very large investment banks or banks, retail banks, they can all participate in the governance of the protocol. So we're creating a very simple Aave market, and also because we know that the software that's being used has gone through a year and a half now of 18 plus months of a really robust, secure performance in a highly adversarial environment. So this is trusted software. We can rely on, everyone can rely on this software. Aave markets are known to be resilient and secure. So we're deploying essentially the same technology with a layer of whitelisting and KYC, and a far simplified risk portfolio in terms of the assets that will be accessible. So the liquidation and solvency mechanisms that apply to Aave still apply to Aave Arc, right? And part of this is to enable market participants, institutions to really experience DeFi and gain a lot of comfort with how DeFi actually works. So we also have thought about the option. There are DeFi protocols that are essentially saying, look, we'll offer you the interface you're familiar with, which is you essentially work with a bank account, and that bank account is held by a centralized intermediary, and then we will deal with the DeFi part in the background. That's not our approach. We are saying, look, we really need to educate the rest of the market, all of the the market participants, whether those are hedge funds, investment banks, the regulators, you name it. We want everyone to start to participate in the DeFi movement. So we'll give them a first-hand experience, right? So they can actually experience DeFi firsthand the way the rest of us experience DeFi. So we are essentially, this is a little bit of a harder process because now there is an onboarding process, there is KYB, so there is a lot of friction compared to the permissionless DeFi protocols. But it's really important to offer. And initially we had a number of financial institutions that were playing in Coven, right? So the Ethereum testnet, and that's when the whole Stani's tweet and the leak happened, and but there were a lot of institutions that were playing in the testnet, and they really wanted to say, okay, let's take the next step, let's go on the mainnet. So we're deploying essentially the same liquidation and solvency mechanisms that are proven to work. So now, who does the KYC and KYB, right? The KYB has to be done by a regulated intermediary that has appropriate permissions. So initially, Fireblocks are joining us as a whitelister, as a launch partner. They have an MSB entity that will KYB and onboard participants. Fireblocks also have a tremendous experience with digital asset markets. They have processed 700 billion plus in transactions. They have some of the best technology on the street when it comes to custodial wallets, and the sheer experience of essentially working with crypto assets. Absolutely phenomenal tech. So we're very we're very pleased to know, and I mean, to reveal, I think it was in another one of tweets from someone else that Fireblocks will be the first whitelister on the Aave Arc market, and so they have also done a tremendous job of enabling access to DeFi through the Fireblocks wallet. So there is established experience. Now we're starting to to create some of the familiar processes that I think regulated intermediaries and market participants are already familiar with. So you go through the KYB documentation, you start to sign some legal and commercial T's and C's with the whitelister. You then essentially say what role are you playing in the market? Are you a borrower, a liquidity supplier, or a liquidator, right? And what permissions do you have? So that's the notion of the permission market that essentially works on top of the Aave V2. And then the whitelister essentially sends a message to the Aave whitelisting contract to say, look, this entity, this Ethereum address now should have this permission. And that also reduces the some of the economic risks we see in DeFi, right? So with known participants, it's really the risk of economic attacks or various other attacks that we see in DeFi in the permissionless environment kind of goes away, because there are various T's and C's. You kind of have some recourse if a market participant engages in some interesting or other high risk activities and so on and so forth. So we sort of take another layer of risk off of DeFi by deploying a permission market. Now, there will be a variety of AML anti-fraud controls that whitelisters will deploy. It's up to them. This slide is essentially just an example. But what will happen is there will be multiple whitelisters at some point, regulated custodians, potentially banks. I think we'll see. That's up to the market to decide. Now, and all of those will essentially adhere, and there will be a coordination mechanism across different whitelisters to align on the standards and mutual terms and conditions and so on and so forth, to make sure that they can all build, because whitelisters need to trust the market as much as more than the rest of the market participants, right? They need to be comfortable that they can continue to meet their regulatory obligations when they're participating as intermediaries in a decentralized market. So in further updates to the protocol, there'll be some very interesting coordination mechanisms across multiple whitelisters. But I think what's cool is Aave has I think one of the greatest innovations in Aave is the decentralized governance mechanism, right? And it's proven to work. It's quite an active community. It's a community that agrees and disagrees a lot with each other. There's a very active democracy that essentially makes decisions in Aave, and those decisions are known to work. One of the things that we had to solve for was how will if it's decentralized and the community makes all the decisions, then what are the safeguards for whitelisters to make sure that they can continue to meet their obligations? So for example, if the governance makes a decision to add a privacy coin, right, to an Aave market, and a whitelister believes that it's not they cannot continue to meet their obligations in that sort of an environment, then the whitelisters can dissent, right? And the whitelisters can say, look, so in Aave, there is a guardian role. And in the Aave Arc market, the guardian role will be essentially a multi-sig of the whitelisters, right? So whitelisters can essentially vote and say, essentially through the multi-sig mechanism, say, we disagree with the governance, and we don't think that, we can continue to meet our regulatory obligations given the decision that the governance has made. And that's exactly the same as the guardian mechanism, right? Now, the governance is supreme. So in that scenario where, whitelisters collectively veto a governance proposal, and governance, you've seen Aave governance, and we've seen a lot of commentary from a lot of participants. So what in that scenario, what happens is, governance could say, could decide to delist a whitelister, or the whitelister could choose to leave, because whitelisters have their own rights and their own obligations. So those types of scenarios will evolve. So there are checks and balances, and that sort of creates, the white paper essentially creates a constitution for a decentralized market infrastructure, which the Aave Arc market provides. And then, that will evolve. So some of the things, I think, if you go to the Aave market and if you're familiar with how Aave works, those things will work exactly the same. And then over a period of time, Aave governance could enable staking, safety module. If it's up to the governance, it's not up to the team, it's not up to the whitelisters, or liquidity mining incentives or variety of incentives. Again, that's up to the governance. It's not up to us. So it's still a decentralized. So what's beautiful about this ARC market is, we are creating infrastructure which is decentralized, which has a constitution, checks and balances to enable regulated market intermediaries to participate in DeFi, and then we'll see where this evolves. So really excited about this, the future of finance, or the future of France, as we say.
Ajit, thank you so much. You have a few questions about ARC, so if you want to answer it, that'd be great.
Yeah, absolutely.
Great. Our next session will be with Jan Van Eck of Van Eck, and we'll talk a bit about his thoughts about crypto and DeFi, and just dive a bit deeper on his thesis. Thank you, Ajit.
Thank you so much. It's a pleasure. Thank you for inviting us.